Hey guys, I'm Big Mike, and like always, I'd like to thank you for being here today. Today we have a webinar with Ilya Kipnis here to talk about R for trading. And I've asked him to put together a multi-part series of webinars, with this first one focusing on a basic introduction to R. So this is going to be the right webinar for everybody that's really new to R or that has not even used R prior to today. So what we'll be covering today, or what he'll be covering today, is basically an introduction that will whet your appetite. Will show you, what's possible. We'll explain how some of the libraries work and get you started with some of the existing resources that are already out there. And we're also going to set aside a lot of time today for Q&A. So Ilya wants to hold the questions until the end of the presentation. So once he's done with his presentation, we'll open it up for Q&A, and we'll try to get as many of those questions answered as possible. As always, the webinar is being recorded, and I'll post the recording on YouTube sometime tomorrow. All right, guys, with that, give me 1 second, and I will turn things over to Ilya. Hang on.
Hello there, and thank you, Mike, for the introduction. And this is Introduction to R for Trading. So without further ado, let's get started. My contact is my first name dot my last name at Gmail, Ilya Kipnis at gmail.com, ilya.kipnis@gmail.com, and my blog is at quantstrattrader.wordpress.com. So by the end of today, you should at least be able to have some idea of what I'm doing on my blog. If some of you have actually read my blog prior to now and can follow along easily, then this webinar will sort of act as a review for you. So without further ado, let's get started here. So what is R? It's a vectorized statistical programming language. So you can do research in it that goes very well for snapshots in time. And there are also many libraries written in more powerful languages. It's free. There are plenty of open source libraries out there developed by people a lot smarter than me, who are smarter than I may ever be, and they've already created the tools that will do a great deal of things that you can just say, I want this library, I want to execute this one line, and you can have computations developed by some of the leaders in the business. That's why I like it, and best of all, it's free. And also, you can develop very quickly in it if you know what you're doing. That you can write one line and it will execute a great deal of code for you, and it's interactive in terms of doing exploratory data analysis. There's lots you can do, and lots you can do quickly. The downside is it's not the most powerful language, so it's not a real-time execution language. What I'm about to present to you is an institutional strength research platform. However, the actual execution platform used by the people that use QuantStrat professionally is something that's proprietary. They have seats on exchanges. They have specially designed execution platforms. So if you want to execute, you're going to be using something else, not R. However, it's very powerful in terms of rigorously testing strategies, which is what today's webinar will be about. So to get started with R, I'm not going to do this now because I already have it installed. You're going to have to follow the links on this very slide. So download and install R from cran.rproject.org. However, if you are a Windows user, there are some caveats. You need R 3.0.3. R 3.0.3. So you would have to go here and you'd have to download this. Why? Because in order to obtain some of the leading packages, you need to actually use a different library repository than the default one. And for future versions of R, the repository called RForge does not yet have working packages that are the latest in their development life cycle. So that's where you'll need to go for that. Next, you need to download Rstudio. So let me open that up. So this is what Rstudio looks like. It's a very powerful IDE. It makes programming in R very convenient. It's text highlighting, function folding, very easy to set up your windows. It's just a phenomenal IDE, which is another reason why I like R so much. This one IDE makes your job very easy in terms of getting up to speed and starting to actually be useful in R. And finally, for Windows users, you need to install RTools. So take this link, and it'll look something like this. You will want rtools31.exe. Moving on. So configuring Rstudio after installing the necessary 3 programs that I just listed, you need to go to Tools, Global Options, and Pane Layout, which I will demonstrate right now. Tools, Global Options, and Pane Layout. So what you want is you want your source in the upper left, you want your environment history build VCS in your upper right, console in the lower left, and files, plots, packages, help, and view in the lower right. So you're going to hit apply, you're going to hit OK, and so your Rstudio console is going to look something like this. Here's where you write your code. Here's where your code actually tells you things. So for example, if I would type 2, so variable is 2 plus 2. So you could see it prints out to my console, and if I want to display a variable, as you can see, 4. You hit Control-Enter to run a line or to execute a selection. So moving on. So here are the packages you're going to need to install. You're going to need to install Quantstrat. You're going to need to install Zoo, TTR, defaults, DevTools, Quantstrat, and then require Quantstrat, and then require DevTools. DevTools is a package that allows you to install from GitHub, which is where my specific libraries are, because in this demonstration I'm going to be using some functionality from my IK Trading library, which stands for Ilya Kipnis Trading. And there's also another library that I'm coding, which is called DS Trading, standing for Digital Signal Trading, and that is dedicated to John Ehlers, who I'm aware some of you may have heard of, listened to webinars from, and so on. Also, one other thing, you will need to type session info to open paren, close paren, to see which packages you have loaded. So I'm going to type in session info, and let me expand this. And I didn't load any packages yet, but when I do require Quantstrat, that's how you require your library. It's going to load up a whole bunch of packages. So session info, open paren, close paren, and you should see blotter 0.8.19. That's the most recent version of blotter. And let's see here. So TTR is already loaded, and you should have 0.22-0.1. So moving along. So the data I get, which is on my blog, which I use for everything currently, is data from Yahoo. I use ETFs, so I don't have to worry as much about stock-specific issues such as splits, dividends, and so on and so forth, or at least worry about them to a lesser degree. So the way you do it is get symbols, open paren, symbols equals quote SPY unquote from character string in the form of 4-digit year, 2-digit month, 2-digit day to same idea and close the parens. So I'm now going to demonstrate this. So let's see, do I actually have anything loaded here? No, so let's open a new file. So I'm going to run this exact line, get symbols, symbols equals SPY, from equals 1998, 0101, to equals 2012, 1231. You might get a few warnings, ignore them. So here's head of SPY. So you're going to see open, high, low, close, the classic 4-digit daily description, the volume, and the adjusted price. I do not use adjusted data. And same thing, so that's so head is the beginning of the data, and tail of SPY gives you the end of the data. So one thing that R can do really quickly is actually chart your data. So I'm going to call chart series SPY, and voila, you can see that I have a time series of SPY. And we can also zoom in, which I'll demonstrate in a second. So, whoops, wrong window. So we can do zoom chart 2008, and we see the S&P for 2008. We can also do something even more advanced. Oops, let me get back there. So reading view. Whoops. And so as I was saying, we can zoom in. So zoom chart 2008 0401 to 2008 1231, and you separate your two dates with a colon, or with a double colon, excuse me, and it's just one date, double colon, second date, and what this does is zoom in. So here's April, here's Dece, and you can zoom in on the chart. So we can zoom in further, 2008-030. So here's March of 2008, as you can see, the beginning of March, end of March. And we can also zoom out, zoom chart 2008, 2012. And as you can see, you can look at the chart whichever way you want. So you can also compute indicators in R. You know, they're the bread and butter of many trading strategies. Like everything else in R, they're just functions. They have arguments, and they give you outputs. Here's the code for the simple moving average. So the default for the simple moving average in R is 10. So if we want a simple moving average, that's the classic 200-day moving average, we can say SMA is SMA, open paren, hit tab, X equals CL, SPY. CL stands for the close. That's a function unique to one of these finance packages. And N equals 200. And so tail of SMA, and here's the 200-day simple moving average. So here is the general explanation of what indicators, how indicators actually work. They are a function name, which is defined through function. Some inputs here, so x, your n, some code returns something. So if that is a bit too general, let me just bring up the function for SMA. So here is the simple moving average. So it'd look like this. SMA is this function. So you define a function by saying function. So variable name is assigned to the keyword function. It's in blue because it's a reserved keyword for R. And here are your arguments. X, n is 10, and these ellipses mean that you pass in other arguments. In this case, these arguments, there are no other arguments to pass in, but there may be other arguments for other functions. So the moving average is run mean, which is another R function that is literally a running moving average. And if and essentially this is naming the output SMA, and it returns this variable, returns MA. So this gets returned here, and that is what this is. So the first 199 values of this variable will be NA because it needs 200 days to rev up. It's a 200-day simple moving average. So if I look at SMA 194 to 200, you're going to see the first data point at the 200th day. So for now, I'm going to stick with functions that already exist in terms of indicators. I make up my own from quite a bit of the time, but at the end of the day, functions are just that. They are simply, rather, indicators are just R functions. There's nothing unique about indicators. They're all math. So to compute it, as I said, it's what I just did. I covered this. So if you ever want to know the arguments of a function quickly in R, you can just do args, open paren, and the function name, so args SMA, and it's going to display x, n equals 10, meaning the n value defaults to 10, and an ellipsis. And now here's the fun part. Indicators can be added to charts. So let me demonstrate. So chart series SPY. And now I'm going to actually add the 200-day moving average. Add TA SMA on equals 1, meaning the first window. On equals 1 will add an indicator on the actual price series. You're going to use that quite a bit if you do moving average explorations in R. LWD, which stands for line width, equals 1.5, and color, which stands for color, equals blue. So there is our 200-day simple moving average on the S&P. One line, and there it is. And now we can also add normalized indicators or range-bound indicators, however you want to refer them, such as RSIs, in a separate window. So in order to compute the RSI, we are going to just say RSI is RSI, price, not X, is the close of SPY, N equals 2 because Larry Connors did a lot of work with the RSI and said RSI 2 is the value that we should be using, so we are going to go with RSI 2, and that's the strategy we'll be working with today. It is an RSI 2 strategy. And the MA type, I'm just going to leave that blank, so it defaults to Wells-Wilder's original RSI. So we have our RSI computed. So let me see if here it is in history, and if you check your environment, under data you'll have the SPI, RSI, and SMA. They are all XTS objects. Everything we do regarding time series in R uses the XTS type of data structure. So if we do a class on RSI, it's going to say XTS zoo. Make sure all of your data that you're working with, that's time series data, is XTS. Because the XTS library has a lot of time series magic that goes on under the hood that simply reinventing that wheel is a really bad idea because years of work went into it. So we use that. And that's that. So we can also add the RSI to our little chart. So add TA, RSI, col equals green, LWD equals 1.5, and boom. There it is. We can zoom in on our chart, zoom chart 2008. And it zooms in not only with the time series, but our indicators as well. You can see the 200-day simple moving average, and you can see our RSI2. So let's build a trading system. It's going to be a Larry Connors trading system, and here's the strategy. We want our ETF to be above its SMA 200, and we buy when the RSI2 crosses under 10. We will buy again when it crosses under 6, and we will sell when the price crosses above the SMA 5. So we're going to make a new script, and just a heads up, there is a bit of boilerplate in QuantStrat. So I have this data already, I have this strategy already pre-programmed. So just like the cooking shows, they already have one in the oven. That's what I have going here. I put require QuantStrat and IK trading up here because we're going to be using functions from these two packages. So here's the boilerplate. First, we want to remove warnings, which, as you saw, when I got the original SPY data, you had some words in red come up saying whatever. I forget what it says because it's not a warning you should ever be afraid of. It's simply, hey, you're doing this for the first time in this session, blah, blah, blah. I'm going to clear the blotter environment. I'm going to have to define a currency and an environmental time, which will be UTC. That is a technical detail that allows QuantStrat to use its timestamp magic. It's under the hood functionality, so just type it in and have this code in some sort of file you source, copy and paste, whatever it is. So our symbols are going to be SPY. So let's just run these lines. So there I load my IK trading package. I load RCPP. That's not going to be used in this demo. So I'm going to suppress messages as I get symbols. But I didn't suppress warnings. Sorry about that. So we need to define the stock for our environment, which is stock symbols currency USD multiplier equals 1. You will use this whenever you're working with your general ETF data. When you're working with futures data, this is going to be a bit more complex because you're going to have things such as contract multipliers, but I'll deal with that another time if I ever actually use futures data, but I don't have access to such a thing. So this line is also very important. Init date, we need to have an initialization date before the first day of transactions in our strategy. So since I know that the first day of my SPY data is in 1998, I picked a day that's before then. It could have been 1997, 12/31. I chose January 1st of 1990. Makes absolutely no difference. So here I'm defining my trade size and my initial equity, which is trade size multiplied by the length of our symbols. So symbols is just SPY. We have one symbol, but this generalizes to if we had 10 symbols, such as SPY and the 9 sector ETFs, or 30 symbols, such as those that I have on my blog. So here's some more boilerplate. We want to name our strategy, our portfolio, and our account so that Blotter knows what's what. Blotter is the underlying accounting and analytics package underneath QuantStrat. It keeps track of everything you do. And it's also what makes QuantStrat such a good research system, because you can backtest your data, and Blotter takes care of so many different forms of accounting for you that after you run your strategy, you will be able to do some very fancy analytics. So we're going to remove our strategy. So right now, I'm getting an error because I didn't run this line. So as I said, I'm going to remove the portfolio, remove the strategy, so that we have a clean environment, because if you rerun your strategy without removing it, QuantStrat's going to get angry at you. It's going to say, hey, the strategy already exists, I already ran it, I'm angry, I'm not going to run this. So here are our 3 initialization lines, and let me blow this up so you can see exactly what's going on here. We need to initialize our portfolio, so the way this works is initialize the portfolio, our portfolio string, so that's our portfolio name, our vector of symbols, so there's an argument for init portfolio, args init port, so symbols is a vector of symbols, and I also called my vector symbols. So the vector it expects, called symbols, is my vector, also called symbols. I use these names deliberately so I can say symbols equals symbols, init date equals init date, currency equals USD, which we defined earlier. So then we need to define our account, which works in a similar fashion. Account string, portfolio string, init date, currency is USD, init ec equal initial equity is initial equity, again with my naming convention of naming my objects the same name that is expected by the arguments, so that way I'll be reminded of what exactly I need to feed it. And then we need to initialize our orders. So portfolio string init date equals init date, and then we do this strategy string store equals true. That's the last bit of boilerplate before we run our strategy. So let me go through this. I just covered this. So now we have our parameters. This is simply my style of coding because I like to keep things in one place using good coding style. If you want more justification for this, read the book Code Complete. It's a good book. So my parameters are my values for the RSI, my 2 thresholds, 10 and 6, my SMA exit parameter, and my SMA filter. And then for my order sizing function, I have a 10-day period, and I want 2% of my notional trade size per trade in terms of ATR. So if I have a $10,000 notional trade size and I want a 2% ATR to risk, then what I want to say is every time I buy, I want to buy, rather than a set number of shares or a set amount of dollars of shares, I want to buy 200 10-day ATRs of this instrument. In this case, it's SPY. The advantage of this is that it keeps your risk orders consistent, both across instruments and across time for an instrument. So say you're in a very calm market and there's a slight trend. Well, you want to buy more of this security to actually have it impact your P&L. At the same time, if there's blood in the streets and things are going crazy, well, you don't want as many units of this security. And so it's going to say, well, I bought 400 way back when times are calm, but times are very hectic now, so I'm only going to give you 100 shares. So this is how it looks like in my strategy. Here are the parameters. Now moving on to indicators. Quantstrat has a very simple syntax, very understandable syntax once you get used to it. It took me a while to initially wrap my head around it because I was just used to programming everything in R, but Quantstrat has effectively its own syntax, and the way it works is this. Add.indicator, which tells Quantstrat, I am adding an indicator to my strategy object. I am going to tell the strategy that this is something I wanted to keep track of. And the syntax goes like this. Strategy.string, which we defined earlier. So up here, this is our strategy string, and it's also our portfolio string, and it's also our account string. And it's called RSI106. So let me just run all these lines. Whoops, initial equity wasn't found. So I'm going to run all of this, and as you see, it adds all of these things to my environment. You see, account string is defined, init date, init equity, max percent, and so on. So now I'm going to add my first indicator, and the name function is actually, it's not any arbitrary string. It's actually the name of a function. So lag ATR is something in my IK trading library, and what it does is it computes the ATR and it lags it a day. Because if you want to make an order at the open, well, you don't know today's ATR yet because you compute today's ATR at the close. So we need yesterday's ATR. So that's what this function does, and we are going to add it to the strategy. So I run add indicator, and moving back to the syntax, the name is lag ATR, which is the function name, and here are the arguments. It takes the form of list, and then as you can see from my lag ATR function, it wants an HLC value, which is a high, low, and close. So if we look at head of SPY, we have the high, the low, and the close, and if we do HLC of SPY, it will give us the high, low, and close. And it also has an N, so how many days do you look back, which I defined here. So N equals period, and period is 10. So this is this. And then you have a label, and labels in Quantstrat are critical because they allow further objects, such as signals, to reference objects that have come before. So label ATRX is so that our entry function, our entry rule, can look for a column called ATRX and say, okay, I have found ATRX, and I'm going to take the ATRX data and I'm going to use it in my computation. And so here we are adding our other indicators. We have our RSI indicator. So our arguments are the price, which is the quote close of market data. This is a quantstrat convention that when you pass in your price, whether it's X, whether it's price, whether it's HLC, you say our argument is quote, which allows it to reference this later. That's a convention. I won't go into why that is. In this case, just memorize it, like, you know, just like 2 + 2 = 4. You have to memorize it. This is a case of memorize this for now. And N equals NRSI, which, as I defined earlier, NRSI is 2. So this is this. So you can add the same indicator twice over so long as you give it a different label. So in this case, we are adding 2 different simple moving averages. We are adding an SMA 5. So as you can see, N is N SMA exit. And at the same time, we are adding an NSMA filter. So this is our 200-day simple moving average, and this is our 5-day simple moving average. So those were the 2 slides. So now let's move on to signals. Work similarly to indicators. What you do is add signal strategy.string, and there are a few signals that you need to just remember their names, because you're going to be using them a lot. Sig comparison is comparing 2 signals. Signal threshold is comparing whether a value crossed a certain number or is greater or less than a certain number. And sig and from my IK trading library is the intersection of 2 values. So the arguments for sig comparison, we have 2 columns: the close and filter MA. So filter MA is what I labeled my 200-day simple moving average. This is why labels are critical, so that, as you can see in this signal, I am going to reference something I added earlier. Let me just add the indicators. And here is the relationship specifier. You have GT, LT, EQ, GTE, and LTE. So those are exactly what you may think they are, which is greater than or equal to, less than or equal to. There are a couple of others that I don't normally use. So once again, we're going to label this. Label is uptrend. So here again, we're going to add another signal. This is called sig threshold, and sig threshold is critical for any type of oscillator strategies. Anytime you have an RSI strategy, an oscillator strategy, a DV2, you know, David Vardy's 2-day oscillator, Larry Connors' RSI, so many different permutations, you're going to use a sig threshold. And here, once again, my column is called RSI, which is this label. And my threshold is thresh1, which is this, 10. And my relationship, I'm specifying that it's less than, and cross is false. So what that means is if I specified cross equals true, it would only say this value is true because the previous day was 11 or higher, and today is 10 or lower. Or rather what do I have here? Or it's lower than 10, excuse me. But if I say cross equals false, it's going to say your RSI is currently less than 10. And here is the same exact argument, except we're using the thresh 2, which is 6. So why do I not use cross equals true? Because I escalate it to my sig and function. So a lot of trading strategies say, well, you want to buy only if all of these rules hold. So the way I do this is that I have a special function called sig and that allows me to specify all the columns that I want to be true. So this is going to say, okay, so you're both, so your RSI is less than 10, and you're in an uptrend, and now I'm going to say cross equals true. So I only want it to tell me true the first day that this is true. This also means that if you're wobbling around the SMA 200, this is going to, and your RSI is less than 10 the whole time, then it's going to give you some whipsaws there. But those instances are few and far between. So same exact type of signal here, except for the RSI 6. Excuse me. And here again is another type of signal, sig crossover, which is identical to sig comparison, except it only tells you the value is true on the first day of it becoming true. So my arguments are close, which is my closing price, and quick MA, which is my SMA 5, and I want the relationship to be greater than. That is, I want the close to be greater than the quick MA. And once again, I'm going to label this. As you see, I've been labeling everything because I need these for my rules. And finally, I'm going to have a signal that says, hey, if you're in the middle of an order and your close price crosses under your 200-day simple moving average, just bail. That's what this signal is. So let me actually add the signals I was talking about. So if you added your signal correctly, QuantStrat will just spit out the name of your strategy. So now we move on to rules, which are slightly different than indicators and signals in that there's only one type of rule function that you need to concern yourself with, and it is called rule signal. Now, the difference here is that rules have a whole plethora of arguments that can be added. So there are some boilerplates values, such as sigval equals true. So we want it to fire on the signal value being 1. The order type, in this case, is going to be market. There are others, such as limits, stop limits, that I will show in the future, just not today. Now, here's something unique about QuantStrat. The order side argument. So this separates your rules into long and short. So if you have a rule that only fires on your long side, then the same exact thing, you can see the same exact signal on your short side and have a completely different procedure as to what happens when you see that on the short side. So one thing I can think of off the top of my head is the doji candlestick, for those that are familiar with Japanese candlesticks. So if you're long and you see a doji, you might want to exit your position. But if you're on the short side, you may wanna do something else. Or lots of permutations. Replace equals false. This should replace should always remain on false, because replace equals true. What that does is, if you have another order on that day, replace equals true will just say, okay, I found this one, I'm executing this one rule, and I'm canceling all the other rules on this day. Probably a bad idea. There are other ways to cancel orders that are a bit more verbose but give you more control. So the prefer argument defaults to close. However, the way quantstrat works is it is a next bar execution system. So if at today's close I see that my RSI2 has crossed under 10, I can't buy after seeing the close because the markets are closed. I have to buy at the next opportunity, which is tomorrow's open. A lot of people on the internet say, hey, if we see this signal, we are going to buy upon observing this signal. It and will not use it, but it's there for those that wish to use it. So here is my order sizing function, OS capital FUN. That says I want to pass in a certain type of order sizing function, and in my IK trading library there's an order sizing function called $ATR, and this is what it is: $ATR. It's this function that, long story short, will say, okay, you're going to give me a notional amount, such as $10,000. You're going to give me a percentage of that you want in ATR, and I'm going to look for a corresponding column with the ATR mod at the end of 3 letters. So ATR mod equals X. That is the same thing as this label, ATRX. So I'm going to look for a term ATRX. That's where I'm going to get my ATR from. So here are some other arguments. Trade size that you saw in the beginning. It was $100,000. And my percent ATR is PCT ATR, which, as I defined earlier. So, and my max percent, which is a position limit for this specific rule, is going to be also PCT ATR. So what this is saying is, give me a position size of 200 10-day ATRs, and give me no more than that. So if you have an indicator that is just wobbling around, like say you have, like say you set your value to be 20. Well, see how it bounces around the 20 multiple times before going up. Well, if you didn't put such a control on, it would say, oh hey, well, we crossed 20, so you told me to buy when we crossed under 20. And we crossed under 20 twice, so I'm going to buy twice. You probably don't want that. So by specifying max percent ATR, it will say, hey, you already have a position and it is worth this many ATRs. You have 200 ATRs, so I'm not going to buy anymore. And so the signal that generates this rule is called long entry 1, which is this label. So as you can see, the labels link everything in QuantStrat. Never forget your labels. And so I've added my signals. So now these are my two entry rules. So this entry rule is only slightly different than this entry rule. Let me bring both of them up at the same time. The only difference is here, max percent ATR is max PCT, which was 0.04, whereas here, max PCT ATR is 0.02. Because the way I interpreted this strategy is Larry Connors told us to buy when the strategy crossed under 10, and he wants us to buy again when the strategy crosses under 6. But he probably did not intend for us to keep on buying every time the strategy crossed under 10. So here are two exit signals. These are simpler rules. So exit long normal, which is our exit on the close going above our 5-day simple moving average. And in this case, the order quantity we want is called all. This is a special value, meaning just dump everything, dump the whole position. And since the trading systems I test are by 1 unit, don't pyramid up, a ton of orders and then exit over multiple days. I assume that I have a small enough quantity of shares that I can get in on one day and get out on one day. So for the sake of simplicity, order quantity is all. And this is the same exact type of exit rule, except the signal column that generates this is the exit long filter, meaning we're in a position, our price crossed below our 200-day simple moving average. We might be in for a steep drop before the price gets above the simple moving, the 5-day SMA again. Let's just cut our losses and get out of here. So one other thing to note is that we have the types of rules, and the rules I use are enter and exit. I've seen risk and rebalancing type rules. I do not use them, but I'm sure there are demos in the QuantStrat directory that actually use those types of rules and demonstrate them. And also, as you can see, I label everything, which is just a good habit to get into. These labels actually are not necessary in this demo. However, if you ever want to use stop losses or chain types of orders, well, guess what? You need labels. Labels are the glue that holds everything in QuantStrat together. So get in the habit of labeling your indicators, your signals, and your rules. So as you can see, I added my rules. So here this is the explanation of a rule that I just went through. So now let's run the strategy. So what I do is I like to keep track of how long it takes to run. So now I'm going to run my strategy, and as you can see, if you did everything correctly, you should see a bunch of orders being printed to the screen. Their time, the date, and as you can see, the demo finished in 10 seconds. If you are going to run something more involved and more instruments, this time can get pretty substantial. For instance, on something that might take me 5,000 trades on total across 30 separate ETFs, which I test on my blog, the demos can take me 10, 15 minutes for one run. Now imagine that you want to optimize 80 separate parameter permutations. You can see how this can quickly blow up, because let's see how many parameters I have here. I have the length of my RSI, I have my 2 RSI thresholds, I have my exit SMA, I have my SMA filter, and then I even have my period which I use to compute the ATR. You can raise that, you can lower that. I use a 10-day ATR. You could probably set it to 5. And all of these things are going to affect how the strategy runs. So even if you had 2 values for each of these parameters, that's a 2 to the n permutation for optimization. So you can quickly see that blows up. So one last bit of boilerplate is to set up your analytics. You have to update your portfolio, you have to create this date range, and you update your account for that date range, and you update your ending equity. So that is how you actually run the strategy. Now the question is, why do you... I just went through a 1-hour explanation of how to do all this. Well, why? And here's the why. See all this? All of this is analytics. And the beauty of R is that unlike TradeStation, unlike your or any of these retail programs that simply give you your analytics and that's that. Well, you can not only use some pre-programmed analytics such as trade stats, which I will show you right now, which brings this up. So you have your trade stats, you have your number of transactions, you have your number of trades, you have your P&L, and here's something pretty critical. So percent positive, 71%. Percent negative, 100 minus that. Your profit factor, about 1.7. I'm not sure how respectable that is. Annualized Sharpe in this case is not something that really has an interpretable value because this essentially treats all your trades as a one-day P&L. It might not be a number you want to particularly look at, but here are some others. At your average win-to-loss ratio, your median win-to-loss ratio, your maximum equity. Well, let me find some other values. So your profit to your maximum drawdown. So whatever your maximum drawdown is, your net profit at the end of the day was 3.5 times that over the course of your backtest. So here are some daily statistics. So here we have daily statistics, and so 54% of our days they were positive. Our profit factor on days. So you take the P&L of every single day and you compute a profit factor on that. It was 1.26, so a healthy edge. And your annualized Sharpe, now this is a daily interpretable value, is 1.29. That's pretty good as far as professional money managers go. If you're talking about the trading universe, that's probably not too impressive. But in terms of what you get out of a mutual fund, not bad. With the one caveat that that I have not accounted for transaction costs here. So if you're using something like E-Trade and you're only working with $200 and they're charging you $20 per round trip, you're probably going to get hosed. But if if transaction costs are negligible or very low, such as interactive brokers, so $2 a round trip, you're going to come pretty close to this performance. Now, here's what makes R interesting. Duration statistics. This is a function I programmed in my IK trading library. So, as you can see, namespace IK trading, and what this does is it computes the duration statistics. So that's the aggregate, and this the individual. It doesn't really make sense for one instrument to say individual versus the aggregate because we only have one instrument. But if you have 30 instruments, your individual stats table is going to be a table, while your regular duration stats is going to be this. So what this is a 6-number summary, your min, max, Q1, Q3, median, and mean of your trading, of how many bars each trade takes. So your minimum winner took 1 day. Your maximum winner was 8 days. Your minimum loser was 1 day. You got whipsawed, and your minimum loser was 1 day, and your maximum loser was 15 days. So might you be able to set a stop loss somewhere that says, hey, if we're in the market after 8 days and our position is not profitable, get me out of here because it's probably not going to be profitable. And one last thing, you can contact me if you do. Right now, I am open to consulting opportunities, so you can find me at my email. And if you want me to help you get something set up, we can get something set up. But now I'd like to open things up to questions. So go ahead.
All right, man. Well, great job. I know it's a tremendous amount to cover and to try to squeeze into to 1 hour like you did. Okay, so as you guys have questions, you can type them in right now. And I made a few notes of some things that I kind of wanted for you to point out to people that are kind of new to R. So can you talk about Rstudio's version control, or like using GitHub as a way of maintaining your code? I think that's a pretty neat feature that some people may like.
Yes. If you are using, so here I have if you're using if you're building a package, if I can just minimize this. So let me show you. I have a package called IK Trading, which if you go to my github.com, Ilya Kipnis, you will see that I have two packages, DS Trading and IK Trading. So right now I'm working on IK Trading because I've sort of hit a wall with Dr. Ehlers in terms of his autocorrelation periodogram. So IK Trading is just my bag of tricks. So you can go to Tools, Shell, and git commit. So here I have some untracked files. All of these are things that I should add to the package, but yet haven't. So you have a little shell here that allows you to do version control as though you were effectively operating from your Unix shell. So for those that know GitHub and Unix and so on, R has the same functionality if you're working on an R package, and it will allow you to do version control and have all the features of GitHub
Right.
through the shell.
So speaking of Linux and Windows, so R is available for both, and people
Yes.
can choose, whichever one they're most comfortable with, and Rstudio will work for both as well.
Yes.
So like,
I recommend the Unix version.
yeah, so I'm running, my R server is in Chicago and I'm in Ecuador, and I just use RStudio, and it's a web interface that's running locally on the Chicago server. But if you use, it's possible to use the Windows version, right, to where it's actually a Windows executable, a local IDE and not a web-based IDE. So it just depends maybe on what you're trying to do. But the Linux version, you can still do all the same things. You can still do all the plots and everything the same way. Yep. Okay, so one of the things that I wanted to point out to people was context-sensitive help. So if you're ever wondering, if you have a question about quantstrat or some function or whatever, then you can just type in SMA at the console and then press F1, and it'll give you the help file for SMA, and you can see what the author wrote. And this is true of pretty much every library, every function out there. So that's always it's always helpful. And I think that there's also some really fantastic, well-documented examples out there in the world. So I think that's definitely an advantage to using R.
Yes.
You covered that, like, if you're adding a function and you forgot, what is it that this does exactly, or what, whatever it is, you can just type in the name of the function at the console and you see the source. That's simple and useful. I'm kind of just recapping some of these things because I see some questions, like why use R, and I think these are some of the few reasons to use R. It's also really easy to download new libraries. So if someone's been using R and they say, hey, I like your library that you've made available, for your IK trading, then it's really simple to install that in R. It's one line of code. It'll download it from GitHub. It's done. It's fast. And then let's say that you update it every day or every week or every month. All I have to do is run another line, and now I'm on the latest version that you updated. Very, very simple.
Exactly.
Yeah. So you can imagine this is far superior to what retail platforms offer as far as updating indicators and such.
Yes, absolutely. And one question I saw was, have I compared it to commercial platforms? Flat out, no, because I remember I actually wanted to get a version of TradeStation working, and so I downloaded TradeStation, and I had a salesman call me up, and I said, hey, look, I don't want to open an account with you. I just want to use TradeStation for backtesting because, John Ellers has some TradeStation code I just want to run and see how it works. And the guy said, well, we can't give it away for free. We'll charge you $250 a month for it. And I said, excuse me? Sorry? No. Have a good day. So,
yeah. Well, I think it's, yeah, so obviously most of the people on BMT are running a retail platform like NinjaTrader, like TradeStation, like Thinkorswim, Sierra Chart, and there are others. But I wanted to open them up because they kind of, you kind of start living in this, I guess I can refer to it as a closed world where you only think about trading in a certain way because everybody that's around you is doing it a certain way. And I kind of wanted to open people's eyes to alternatives, and R is a great way to experience an alternative way to look at data, to analyze data, to create strategies, and that was the whole goal. So I see some questions here. I made one more note that I wanted to talk about. So the plotting is obviously pretty important because, after you analyze all this data, you want to see it. There's a fantastic library, Performance Analytics, that is got some built-in chart tools that lets you chart, like some of those statistics you're talking about could be charted over time. There's drawdown over time charting capability. You can chart basically anything in R. I mean, that's what it's built for.
I mean, I just want to say one thing regarding analytics. if the analytics are not built in, if you which the performance analytics library, first of all these packages are created and maintained by a team of elite quants in Chicago, one of whom is an algorithmic trading partner. Elite quant, he's on a new desk right now, but these are institutional strength. This is an institutional strength research platform.
Right.
One thing to note is that Quantstrat itself is not an execution platform. So if someone is looking for an all-in-one,
right.
I want to write my strategy and then I want to hook it up to interactive brokers, and I want to have my Quantstrat strategy execute on interactive brokers, that is not this. In Chicago, this elite quant that created Quantstrat, he actually executes through Deltix, which is, a whole separate kettle of fish. However, from what I understand, there are packages that connect R to interactive brokers.
Yes.
And there is nothing unique about Quantstrat in terms of you have to do it in Quantstrat's way, because all the indicators it computes, they're just functions.
Yes.
You simply pass in data, and you can say, well, here's my data, and I want to compute this indicator, and even though I've never used it because I don't have really the capital to do the trading I'm testing, is say, okay, well, hey, I just got a daily signal here, so interactive brokers go and execute. In terms of tick data, R is indeed used for researching on tick data. Quantstrat is used for researching on tick data. In Chicago, this person I know, he uses R to research, to run simulations on tick data. So in terms of scaling and big data and all these different things, yes to everything. It probably needs some other functionality. You would probably need to know how to use R's parallelization functionality to spread it out across however many cores. And granted, R is not C++ in terms of how fast it is. However, and I quote, that currently Quantstrat Speed executes a custom C++ built backtester that was built professionally in Chicago several years ago. So
right. And
even though it may look slow, it isn't.
So just to back up for a second, so personally, I use the Interactive Brokers library that basically uses the API for R. And there are many other libraries out there, so depending on who your broker is, some of the less retail-facing brokers do have APIs, and there's either an existing library or you can write your own pretty easily. It was not hard to take an existing package for IQ Feed, for example, and then I modified it to fit my needs. And I did the same thing with the Interactive Brokers package. So, I'm using it as an all-in-one solution. It is possible to do it, and there are other resources available. So, like, going back to the plots for just a second, if you want interactive plots that you're accustomed to with retail charts, it is totally possible. I'm doing it. You can use, there's a library called R High Charts, and there's going to be a new library, R High Stocks, here soon by the same author, and that will give you the ability to pinch and zoom with your mouse instead of doing it from a console, just to give you an idea. Or interactive plots. You can do the same thing with building a web front end. So, like, if you want like buttons, like a traditional platform would have that give you different functionality, you could use Shiny with R to give you a web-based interface using JavaScript or JSON or whatever you want to XML, and interactively or real-time update your charts or your output. So all these things are possible with R. It just depends on what your goal is. You talked about tick data, so I use tick data extensively in what I do, and definitely it is let's say a weakness of R to use extremely large data frames. The reason that my server has 128 gig of RAM is because of the tick data. Trying to analyze 5 years of tick data, multiple instruments, is very, very memory intensive. But if you're somebody, well, you mentioned Parallel. You can use the app Parallel, and you can do things. I've posted a lot of code over the last bit that shows what I'm doing to try to speed up some of those functions. So the answer is you can do almost anything you want. And if somebody else hasn't already started, you can at least use all the resources that are out there in the world to help you get started, right?
Right.
Spike is saying, how much memory does R use, and will it slow down his computer?
Well, the answer to that is it depends. It depends what you're doing. If you're going to throw a job to all 8 cores or however many, if you're going to use up every single core in your machine with a data frame that takes up all your RAM, well, what do you want? But if you can work with your data in RAM and manage it correctly by removing data that you are no longer working with, then it's not going to completely crush your machine. But if you're trying to push your machine to your limit, well, any task that can work with yet more data can and will do that. That's not native to R. That's anything.
Right. And Franz was asking, he basically said it seemed a little slow compared to some other platforms on the back testing side. And I would caution against being too sensitive to that because, first of all, depending on what you do, it doesn't have to be slow, right? And then the second, some of these other platforms, like just say NinjaTrader or TradeStation, for example, they have a lot of limitations with their backtesting engine that R does not have. And you cannot, I mean, they're fixed limitations. They're done. If you use this app, this is the limitation. With R, there's really no such thing. You can do whatever you want. So that has a price to pay, and sometimes it is performance. But I really never find myself complaining that it's slow, especially if you write your functions in such a way to use Parallel. Nick is asking, basically, how can he translate all this into a custom automated trading system that executes across 5,000 tickers, like what Big Mike is doing? What do you think, Ilya? You talked to your friend in Chicago that's presumably doing something more similar to that. What does he say on the subject?
Well, in terms of research and execution, Quantstrat is a research platform. The reason that you use Quantstrat is that you can write a strategy very quickly. But your cost is that you are going to be you're going to have to load the data, and you're going to be using it offline, so to speak. Is there some sort of package that connects Quantstrat to interactive brokers? I have heard of such a library floating around.
Yes.
I have not seen it myself. I believe it is out there, though.
Yeah, I use it. Yeah.
Okay, great. So there is indeed a way to connect Quantstrat to interactive brokers. So you can make Quantstrat into a fully automated, so to speak, automated trading system. Is it recommended? No. but you can.
Why? I'm just curious why you say it's not recommended, because I'm doing it. I've been doing it for 6 months.
Well, I mean, it depends on the frequency at which you need to execute. If it's the case of, oh, hey, I got my signal at the end of the day, let me use R to send a message to interactive brokers that I want to buy, or whatever it is I want to buy. That's not a problem. But, if you're trying to, beat Getcode to the punch in terms of executing on these microsecond transactions, not a good idea.
Yeah, sure. I don't use R for any kind of HFT stuff at all, but I do monitor 1,800 tickers in real time, just so you know, so everybody knows. I use IQ Feed. I download 1,800 tickers in real time, tick by tick, and I make decisions based on this in real time. execute them through interactive brokers. And then the other 3,200 instruments or so that I store data on daily and tick data on daily, I download like an end-of-day dump, and I use that data to give me correlations or other analytics, let's just say, against some of the data that I'm monitoring in real time. So it's all possible. And there's bridges for everything, right? So, you know, some of my code is in Python because it's better at doing certain things, and there's a Python to R bridge. Some of the R libraries are written in C++, and they're already very fast, like what you mentioned. You can even write a Ninja script bridge for NinjaTrader if you wanted. Probably even TradeStation, to where you could actually bridge from indicators into R if you wanted to. It wouldn't be that hard. Let's see. George says, is there any reliable translator that will convert R to native code like C++? I'm not aware of anything, are you, that does it automatically? I mean, you have to write it in C++. Whoops, my audio.
Can I just hit this translate button and it will...
Yeah. Sorry, my audio is dropping out. Can you repeat what you said, Ilya?
All this code into R, hit the translate button, and it will translate this into perfectly compiled, memory-managed, expertly written C++. Well, if that was the case, I'd probably be making half...
Right.
Mike, are you there?
Yeah.
Yeah, so...
Audio is dropping on and off, but we're back. Yep.
The answer to that is a lot of R functions are actually written in C++. They call it C++, and there's a great library by a man named Dirk Edelbuttel. I hope I'm pronouncing that correctly. That is called RCPP, which allows you to call C++ code from within R, and there are a few hundred libraries, a few hundred packages that depend on RCPP. Two of which are the libraries that I write, because I know that John Ehlers likes to use a lot of, you know, this computation is dependent on the last computation. You know, even something as simple as as the exponential moving average, or even the simple moving average, is dependent on C++. But the advantage of that is that you write you solve your bottlenecks through C++, where you absolutely must use iteration because R's looping mechanisms just aren't that good. But once you do, you can hop back up to R and do whatever it is you need to do in a lot faster of a fashion, because the trade-off to powerful languages such as C#, Java, C++ is that you have to micromanage so very many different things. You have to make sure this piece is working and that piece is working and that piece is working. When in R you call one of its operations and it will run that C code for you.
Right.
So that's that.
What about machine learning? There's a lot of people that talk about support vector machines, other machine learning. It seems to be pretty popular in the universe of R. Have you ever done any work on this?
I mean, I've played around with support vector machines and random forests and so on, and my opinion for where you would apply that is in something you know, is something more that's a bit either a bit slower, or that you train your model ahead of time and then use its predict function to actually actually make your trading decisions. What I've heard though is that the best way to use it in the trading world is to have a bunch of separate sources of alpha already ready to go and use machine learning to blend them. But in terms of, here's your market data, let me just throw a random forest or support vector machine on it, and it's going to give me these fantastic buy and sell signals. Once again, garbage in, garbage out.
Yep.
Yep. Machine learning is not some golden goose. It has some very specific uses, but if you try to throw it at something that that you shouldn't be throwing it at, your results are not going to be all that great. I remember reading a blog post, in fact, that someone was trying to use support vector machines to predict returns using only past returns-based data,
right.
And it was like flipping a coin.
Yeah,
but
I see this all the time. I've seen the same pattern where exactly what you're describing, and I would personally. I'm not a quant, and I definitely am not any good at math, so this is a major obstacle that I have. But what I'm trying to do with machine learning is completely different than what I've seen with other people, and that, in the short version, is to apply it to the same portfolio strategy that I already use, where I look for baskets of stocks that work well together, that complement each other, that lower my risk when traded together, and I want to apply machine learning to help me choose those instruments. Nothing to do with what is the closing price going to be tomorrow, which is what seems almost what everybody else tries to calculate.
Right. I will say this. I've read papers, for example, like if we see last month's treasury yield and last month's earnings to price yield on the S&P 500 and all these separate monthly factors, and we want to, say, switch styles between, large growth, large value, small growth, small value. There were some style switching papers that I read. Well, in that case, I think, yes, machine learning can indeed help you if you are doing what the algorithm is actually trying to do, which is to classify. You want to classify which of these four are going to do best. Then in that case, you probably may want to try random forests.
Right.
It's something I will want to touch on in the future. I have not yet looked that way. Seriously, because the hard part of that is just getting all the data from who knows how many disparate separate sources, from Fred, from Quandl.
Right.
It's an exercise in herding cats. The actual machine learning, though, is as simple as require random forest, call random forests on your training set, and predict your testing set. It is that simple.
Right. Okay, Ilya, since we're up on about an hour and a half, can you throw up your PowerPoint slide with your contact info? And that way, yes, people that have any more follow-up questions, that's the best way to get a hold of you, I presume.
Yes. So you can go and read my blog, quantstraptrader.wordpress.com, named after the package I just showed you. And there's my email, first.last @gmail. And as I said, I'm currently, in the market for consulting opportunities. So if you like what you see and you want me to help write your strategy in R, to have it have, who knows how much analytics, then, let me know. If, or any other reason that you might want to contact me, if you want to talk to me, just let me know. I'll be happy to talk.
Right. All right, man. Well, great job with the first part of the webinar, and I hope to have you back in the coming weeks, and we'll maybe pick something slightly more advanced, and maybe people will have more advanced questions after they've gone today and downloaded R and played with it over the next few weeks. That's my hope, anyway.
Yeah. It was a pleasure.
All right, guys. I'll post the recording of this sometime tomorrow. There's a thread on BMT if you want to post any follow-up questions. Otherwise, you can also email Ilya. His email address is right there. Be sure to check out his blog, and I'll see everybody on the forum. Thanks, Ilya. Bye.
You're welcome.